Good morning, good afternoon, good evening, wherever you're at in this crypto world. My name is Cody, and I will be your host, and welcome to the Bullpen. Bear with me for just a second as we try to get some of our panelists up, and we get our co-host up, Scott, and we'll kick this thing off. So bear with us for just a few more minutes, and we'll jump in. All right, I think we've got Scott. Are you there?
Yeah, I'm here. Good morning.
Perfect. Yeah. So, while I'm trying to get the rest of our panelists up, why don't you go ahead and just give a quick intro to what Receivable is all about?
Yeah, thanks, Cody. Receivable aims to solve problems in the revenue-based finance industry by tokenizing receivables from small businesses and creating a secondary market to enhance liquidity in the industry, with the goal of bringing down the costs of financing for small businesses.
All right. Love it. Love it. Yeah. So we still got a few stragglers, probably have a couple of other AMAs that they're attending that they're running late on, but we definitely have a few legends already up on stage with us. Let's go around the horn and start introducing while we wait for those other people to join. So joining us this week is, I believe, Jeff at Amplifi. How are you?
I'm great as always. How are you?
Doing well, doing well. Why don't you just kind of give us a little intro about Amplify and what you guys are doing over there as well?
Yeah, sure thing. Jeff, founder of Amplify, we focus on AI-powered asset management, right? So making DeFi more accessible to the masses. Basically, we use a combination of account token chain and gas abstraction techniques to remove the technical barriers associated with low DeFi adoption. And we have all of our strategies powered by our AI model, which decides the distribution and the auto rebalancing of those assets for the users in real time. Users don't need to, swap. They don't need to bridge. They don't need to pay gas. They don't need to make any manual optimizations. They simply deposit and they earn like they would in a centralized money market, but with all the benefits of DeFi and decentralization.
Love it. Love it. Thanks again for joining. Always a pleasure to have you on Spaces. Love what you guys are doing over there as well. So, next up we have, Matt. Matt, I've spent a few times on a couple of different, AMAs with him. He's pretty good at what he's doing. Matt, why don't you just kind of give an intro about yourself and what you're building?
Hey, good morning. Good to be back here. I like hopping in these X spaces. They're just a different type of conversation, right? We get up close and personal in these talks. So tokenization is 10% of what we do. I think that's given, me being here. The 90% is what's really, really interesting. And that's how we harvest, structure, and verify data pertaining to the real world, particularly real estate, because that's where we're focused. My company building is in the peanut gallery here. And this part of the process is really important because you're taking something that's tangible and doesn't know how to report itself. It's a piece of property. It's highly complex. It has a lot of moving parts. And you're trying to turn that into data points and numbers, and most importantly, value. It's a complex process in and of itself, but then reflecting that on chain and doing that in perpetuity so that if we do have a token, it's not just a static token. It's not just an SPV or a number somewhere. It's like a living, breathing, dynamic representation of value and risk, all being calculated rapidly from that underlying asset. So that's what the building specializes in, I guess in layman's terms, data management and tokenization.
Awesome. Awesome. Welcome. Welcome. Good to have you aboard as well. Let's go over to Chainsight. Go for it, my friend.
Hey, what's up, everyone? My name is Hussein. I'm the co-founder of Chainsight. We're basically the open data network, where it's infrastructure where we bring in all the data of RWAs. So if you have API endpoints, you can spin off to on-chain data and supply it to tokenization. So we're basically bridging between the protocols, between the real world, among. So nice meeting you, everyone. Thanks for having me here.
Absolutely. And we've got some more newer faces on the bullpen. So, Nick, why don't you go ahead and introduce yourself?
Hello, hi guys. I see some familiar faces. Thanks for having me. My name is Nick. I'm CEO at Amplifi. And we've seen that DeFi has a problem. Yield models are often unsustainable, backed by inflationary tokenomics rather than real assets. And meanwhile, real world assets are booming. Most projects are lacking liquidity or credible investment structures. So this is how we build up Amplifi, a yield-backed RWA investment opportunity that allows investors to invest in tokenized luxury assets like watches, car, and fine art, while earning stable APYs, typically around 10 to 12% based on the existing business process. So we provide a potential upside to almost 50%. And I'll explain briefly how that works. So imagine investors buy into these tokenized assets at 50% of the fair market value. These assets are directly bought from the asset owner, and the asset owner has the fixed buyback window to repurchase his asset at a premium. So then there are two scenarios. Scenario one, he's able to repurchase his asset and gives back the premium to the investors. The second scenario is more interesting from an investor perspective, because if the asset owner actually defaults, the investors take the full ownership and unlocking even greater upside. So summarizing, a stable 10% yield based on real assets, no inflationary tokenomics, 50% potential upside potential, fully on-chain, tokenized and transparent. And this way we can actually explain where the yield is coming from. And I think we're one of the few DeFi protocols that can actually explain where yield is coming from.
Very interesting. Yeah, can't wait to dive into it. Thanks for joining us. We have Joel joining us, one of an OG, been on many spaces with him as well. Why don't you just give yourself a quick intro, my friend?
Hey everyone. Sorry, I was making my little espresso here to make sure I have something useful to say for once. My name is Joel. I run business development and marketing for Dash, which is a cryptocurrency focused on being the very best money and payment system in the world. Instant transactions, very low fees, privacy, and some good usability features like usernames and contact lists and encrypted metadata for your transactions, so you actually can save what you actually used it for. Going to be a very exciting year this year for us, and I'm obviously very happy to be here all the time. Extra caffeinated as usual, and yeah, very excited to be here.
Love it, love it. And we have, last but not least, Jose. Go for it.
Thank you very much, Cody. Grateful to be here. My name is Jose, director at Own. Own is a layer 2 that's focused on real-world assets. We are integrated with Facet. Facet is a regulated exchange active in 9 jurisdictions. We have 220,000 users who are already buying tokenized securities, bonds, funds in the emerging markets. Own is leveraging that distribution power, combining it with an open infrastructure for developers to build permissionlessly. And if they need regulated distribution, then we can provide that path through Facet infrastructure.
Awesome, awesome. Yeah, definitely. We've got a great lineup of panelists today for sure. Looks like we lost our co-host, so Scott just sent you another invite if you want to accept that. If you can't, just drop back out and come back in. We'll get you back up as quickly as possible. But with that being said, yeah, let's kind of kick it off. If you're just tuning in, my name is Cody. I will be your host, your guide for today's discussion. We've definitely got a great topic coming up with can blockchain unlock billions in trapped capital? So definitely got some good stuff cooking. If you haven't done so already, please give this a share. It'll help with the algorithms on Twitter, get this space out to the masses. It's not only a great education educational piece, but it is also opportunity for savvy crypto enthusiasts to find new opportunities to get involved with. So we definitely want to get it out to the masses on that. So with that being said, thanks to our listeners for tuning in as well. We appreciate the support. We couldn't do these without you. Likewise, we appreciate the panelists and take a time out of their busy day to join us as well. We've definitely got some very, very good intellectual people that know a lot about this space on this panel, and we definitely want to reward them with a good follow. So give them that at least. We would appreciate that. So the first question, just kind of jumping into this, is, for those that are just listening live or will listen to this a little bit later, does anybody want to take a swing at kind of explaining what the difference is between TradFi, DeFi, DeFi AI, and all these different acronyms that we have kind of thrown out there, and what it means to these systems for them to interact with and all that kind of jazz. So Amplifi, thanks for being a sport and kind of cracking this nut for us.
I'll go in nice and high level so that everyone else can do a much better job. So yeah, for those who are listening, TradFi is what we've had, since the beginning of banking, I suppose. It's everything such as banks, credit unions, stock trading, commodities, whatever you want to talk about. It's traditional finance, right? It's everything we're used to in terms of traditional investments in order to generate income, where we keep our money, how we transfer our money using, typical FX, etc. So it's very vast. Obviously, it's, the market is absolutely ginormous. I don't even know what you would say. Would it be, tens of trillions, hundreds of trillions? I don't know. Maybe even quadrillions. DeFi, obviously, as we know it, is the very beginning of decentralized finance. For me, specifically, DeFi, nowadays is more of the infrastructure layer. That's what I would call typically DeFi, right? People can definitely access it. You can access your RWAs, you can access your curves, you can access a whole host of protocols. But DeFi for me has now sort of positioned itself as the infrastructure of decentralized finance. Obviously decentralization, meaning you take custody over your own assets. You are responsible for your own money, which is great, so that, only you are responsible if something goes wrong or if something goes right. And the opportunities that DeFi offer are infinitely better than what banks can offer you, but it's very inaccessible. That's where DeFi AI comes in. So for now, DeFi AI, in my point of view, is definitely more of a middleware or consumer-facing app side of things, which helps make DeFi more accessible, right? So DeFi, for all of its benefits, is highly inaccessible. DeFi AI, which is part of what we do, basically simplifies access to DeFi through a whole host of different, technologies or mechanisms, such as burden mechanisms, interoperability, abstraction techniques, etc. So I'll pause there.
No, that was definitely a good one, and I think a great explanation. I'll kind of throw a little bit in there, and we'll throw it over to Matt here in just a second. But what are real world assets or RWAs, and how do they kind of fit in with this whole DeFi ecosystem? Matt, over to you.
Yeah, I'll add 2 points. Current financial markets or capital markets sit just under $2 quadrillion, so it's big. I suppose finance is made up anyway, so it could be more, it could be less. And it's important to point out that TradFi started fairly decentralized. People used to own or at least possess a lot of their own assets. Now everything is very centralized, where we rely on many, many companies and institutions and intermediaries to handle everything. And so TradFi became centralized FI, and DeFi is sort of a resistance against that, where now technology is granting power to the people to take control back over their assets or the flow of their assets and the actual returns. We don't just have to be cattle for those centralized institutions and exchanges and corporations that are reaping and taking the wealth that we actually have and produce as people. As for RWAs, it's a nuanced definition. I think of real world assets as not just anything that exists in the real world, but something that also has a fair market value attached to it. So you could classify, I always use the example, just random components in your house as something in the real world, but does anyone really want it? The answer is no. So there's usually a tangible price tag attached to that asset that makes it an asset, something that has a stable value that can be agreed upon between parties. And in many cases, this is real estate, cars, art, although cars depreciate, gold, commodities, oil, fuel, right? All of these different things that exist in the real world, but have something of value that can be used as a base, used to hedge against something else, used to invest into, used to trade, right? Because there's some sort of change in that value. That's my definition, and maybe I'm wrong.
I think you hit it, my friend. Let's see what Joel has to add to that.
Yeah, so very simply put, I would say TradFi is centralized finance, or rather permissioned finance. And I also don't think that this is it's not necessarily by design, it's just that's what was available when it was built. And decentralized finance is permissionless finance. And I guess the difference between being able to use those on a practical sense is there's a whole permissioned system set up for traditional finance, meaning KYC, identity, etc., who can own what, who legally owns what, which person does this, who's allowed to do that, etc. Whereas DeFi, anyone can just start using it. Anything, even an AI, like an AI agent or something, can just start using and trading and earning yield or whatever else. And so that's the big difference. I would say real world assets, to my understanding at least, are real assets that have that sort of permissionless, trustless, blockchain rail element to them, to the actual ownership of it. And I think that definitely RWAs are going to be one of the trickiest things to get right. But once you can get them right, and if you manage to get them with similar, I guess, efficiency or permissionlessness gains as just the purely digital things of DeFi, I think you really have a market for boom. Now, one thing that's kind of interesting is TradFi is only TradFi because that's at some point we'd want DeFi to become TradFi, not to become permissioned, obviously, but at some point we'd want the permissionless rails for finance and everything we do to be kind of the norm of what people interact with. And so when at the end of the day you do have institutions and individuals earning investment tokens, et cetera, like that from their actual salary of their 9-to-5 job or whatever you want to call it, that should all end up being on decentralized rails eventually. And so DeFi and TradFi would then merge and kind of become the same thing. We're a ways away from that, but that's kind of the thing. So the recap, DeFi, permissionless, TradFi, old school and permissioned, and identity kind of pinned. RWAs are what are basically the DeFi paperwork, so to speak, on top of things that exist in the real world.
Yeah, I kind of like that explanation. It's a good foundation for the conversation for sure. Scott, you got your hand raised. Go for it.
Yeah. So great points, guys. I think everybody who's spoken so far has done a good job of summarizing TradFi versus DeFi versus DeFi AI, whatever, however you want to say it. I just wanted to make a point, because as I've started to learn more about the history of banking, I thought it was really interesting that before the Fed was created, right? You had thousands of banks in the United States that all issued their own currency, right? There was no standardized currency. So credit creation in the United States was actually decentralized, back, before the Civil War and before 1913 when the Fed was created. And, you're kind of seeing a lot of parallels, just, it's all being done digitally now, but with stablecoin issuance and decentralization of credit, I just wanted to kind of throw that out there because it's just funny how things happen in cycles, but even the technology might change and things might have a different flavor, or they might look different, but the fundamentals of the economics, they things circle back around. And I thought it was interesting how you had all these banks and they all just kind of made their own money, and there was no uniformity, there's no centralized currency. And then now we have the Fed, and there's really just one bank, right? So that's TradFi is there's one bank. It doesn't matter if you go to Bank of America, or you go to Wells Fargo, you go to Chase, you're going to the bank of the Fed, and they're all just franchises of the central bank, and everything is completely centralized. And now I think the technology that we have available to us now that we're all working on building is empowering us to to sway the pendulum back to decentralization, but to do it in a way that actually works.
No, 100%. 100%. I like that. Let's go over to Amplifi. Jeff, you had your hand up.
Yeah, I'm going to ask a question to people here, actually just off the back of what the last guy was saying. I'm sorry, I didn't know who that was. So obviously he was saying that the US started off quite decentralized. Ultimately, it ended up very centralized because you had, hundreds of thousands of banks, and now you got a handful. Does anyone ever envision DeFi going the same way? So let's say, for example, Aave becoming extremely wealthy and extremely powerful, and being able to essentially vote in governance to buy other tokens and fold those companies, or to absorb those companies, to the point of where you have a few major players in DeFi and actually everyone else is frozen out.
I was going to say yes, and that's why I put up my hand, where history doesn't repeat itself, but it certainly rhymes. And you're starting to see this already, where people see how scattered the ecosystem is, and they're pushing for more centralization, or at least uniformity in the DeFi space. They want maybe one or two currencies that they can rely on. Bitcoin is becoming gold. All these alternative coins are just like those currencies that every bank or every country or every person could create. And we're saying, let's consolidate these down. There has to be sort of one that takes precedent, I think, especially for a government. And that's why there are conversations around central banking digital currencies. They're just doing the same thing that they did 150 years ago, in almost pigeonholing us to one currency, which could be bad, could be good. But I think that we should just look at the past. I think that's a phenomenal point, and that'll help us predict where DeFi is going. It's almost inevitable, for better or for worse.
Yeah, I liked how you said that, history does repeat itself, but in new ways, right? It runs parallel, not necessarily the same thing, but it's, it's a new skin, new lipstick thrown on the same old pig kind of thing, but with new innovation. I like that. Nick, go for it. You have your hand up.
Yeah, thanks. Well, yeah, let's hope history doesn't repeat and we make the same mistakes with all the KYC, AML, which is, I think, well, we have to do it, but if you find convergence between TradFi and DeFi, things are going to get messy. And we see this as well from our Archifi perspective, right? Because we are bridging the gap between real world assets and DeFi. So one simple example, if we sell an asset for, let's say, 500K on the platform and give that stable coins to the asset owner, and he's trying to get that back into the traditional financial ecosystem, it's an absolute nightmare. So let's find ways where we have kind of a combination between decentralization, more ownership, and probably less compliance, because I think compliance has never worked. Although it is necessary, I think many people and many fraudulent people have found ways to avoid it. And I think it's mostly the small investor like you and me that needs to be accredited or needs to go through certain hoops and is not actually tackling the problems that we have in this industry. So I'd love to find convergence between DeFi and TradFi and just call it finance and creating this world where money flows much easier. That's at least what we're aiming for. We're not there yet, but yeah, I hope we see that one day.
No, great point. Great point. And definitely leads into the next question. But I liked how you point out, that there are a lot of fraudsters out there that will try to find every single loophole, no matter what kind of firewalls you kind of put into place. They're always going to try to find ways to get around the process of flow of things. Where I feel like DeFi, the blockchain technology, could technically solve a lot of those issues and help harness those guardrails that we definitely need without the heavy regulation and oversight. That's just according to the book of Cody, but hopefully a lot of us all feel the same way. But yeah, definitely. So that kind of thanks for the Nick. It really kind of led into the next question. We've definitely got a lot of great RWA projects on the panel today, so I kind of want to jump into that. So the next question is how does tokenization of real world assets like properties, unpaid invoices, or revenue help businesses unlock liquidity in the real world? Joel, go for it.
Yeah, I figure I might as well go first because I kind of have less to say on this entire subject than probably some other people. But at the same time, there are some kind of interesting use cases even at the very smaller kind of merchant level. And so there's a friend of mine who's actually working on a merchant tokenization tool for the Dash ecosystem that basically would allow merchants through their point of sale app or whatever to issue tokens and NFTs and things like that. Including, so obviously the easy thing to think about is like rewards points or something like that. So you get a punch card point every time you buy your coffee, whatever like that. That's not super interesting, but it would be interesting to be able to do, I guess, pre-sales for products, including, so for example, let's just say you're trying to start up a local taco wagon, shawarma cart, kebab wagon, whatever it is. And you don't have a lot of capital and you don't want to go through the traditional finance system to obtain a loan or whatever to actually get the startup ingredients, for example, and equipment. You could potentially just pre-sell a bunch of your product and use that capital to then kind of bootstrap your business, and then later as people come in, then they can kind of cash in and get their free item or whatever. But also the ability for, I guess, like the resale value of that could be potentially interesting, where people might buy a lot of this ahead of time. Like if they anticipate you having a very, a killer kebab, for example, they might buy discounted pre-sale versions or tokens and then just try to flip them on the open market for a higher price later, especially when this kind of thing takes off. So you could end up with a whole lot of startup capital and from that, and then more speculation goes back and forth of, what about if the prices get raised at some point after the initial bit? Now you have the incentive to actually trade these and buy lower, and then someone else buys higher, and then everyone kind of makes a profit off of that. But then basically you bootstrap an entire ecosystem from just a very small business. And something like that, well, the real world asset is the food item, for example, in this case. But the tokenization allows people to really buy and trade, etc., permissionlessly on pretty advanced infrastructure. This very basic at the smallest level sort of startup capital for a business there, and it could be very interesting, especially if there was a way to have like the token issuer, in this case the business, take a very small fee for each swap or trade or whatever else. So then the more people are betting back and forth and trading and et cetera, the more they can actually earn a little side income off of the ability for people to speculate on the future prices of an item like that. And then of course the other thing is, if you have certain, like the first 100 customers get a commemorative NFT of some kind, and that will be redeemable for whatever else in the future. But basically, not only is it a fun little collectible that you could then use, but then you could also, again, trade and speculate, etc., off of this basic very limited edition thing that grants some certain special privileges, such as after a certain time, let's just say the last hour on like a Saturday or whatever that the business is open, it's exclusively for people who own these special NFTs, for example. And again, the whole market side of that is completely not, it's not necessarily something that has to be taken care of by this small business. They just sort of sell product, sell tokens, sell NFTs, or gift NFTs, whatever. And then all the speculation, all the trading, all the viral marketing that comes from that all kind of happens because of this permissionless tokenized kind of layer for doing all this stuff. So that's just one interesting example that I've seen kind of being worked on just kind of in my own ecosystem here that I think is interesting. And not a lot of people are thinking about kebab wagons when they're thinking about real world assets, tokens, and NFTs, but there you go.
No, I love that. I love that. Yeah, there are definitely some great use cases for tokenization and permissions around that kind of stuff. I mean, when you were talking about that, I watched a video, oh gosh, a year or two ago about one of the Jackass characters and Wozniak going into the Apple store using his ID badge to purchase and get one of his employee discounts, and they were all commenting on how Wozniak was like number one or number two employee of Apple, and it says it right on his badge, and how they were kind of commenting on it. And I mean, there's no difference between what you're talking about and an employee badge to be able to get a discount on certain things, right? So great call out on that. Scott, over to you, my friend.
Yeah. Hey, would you mind just repeating the question? I just want to make sure I hit it right.
Yeah, no problem. So, how does tokenization of real world assets like properties, unpaid invoices, revenue help businesses unlock liquidity?
Yeah. So, I mean, it's really not just about businesses, right? It's about, any entity that participates in the economy. I mean, so like on any given day, there's what billions or trillions sitting, just sitting on balance sheets and in portfolios. And it's illiquid, right? You can't move it. And that's kind of what blockchain and tokenization is enabling. It's unleashing that movement, right? So you can create instant secondary markets and programmable liquidity, right? So you basically can increase the speed of capital cycles, right? So you have like you said, all these different assets like receivables, invoices, commercial real estate equity, private credit, luxury assets, et cetera, right? The list goes on and on, right? Someone said earlier, anything that has value in the real world, tangible asset that has value can be tokenized, and in a traditional system, right? Like how do these assets move? I mean, it's manual. You have all these, centralized settlement layers. There's batch processes. There's, static agreements between parties. So it takes a really long time to move assets and to liquidate them. And blockchain really changes the game because you have literally real time settlement. Everything's programmable. The compliance, risk, it's all built into whatever protocol you're using. You have global investor access. So now, anything that was, where the value was a function of the marketplace, right? So, you have a certain market for an asset, and it's a local market, or it's a regional market, or it's a walled market based on, geopolitical boundaries. Now you have a global marketplace, which increases liquidity. You have composable infrastructure, and you can fractionalize everything. And that's really, the biggest thing is they take any asset and you can make it infinitely divisible, maybe not infinitely, but you can fractionalize it, and you can open it up to to any size investment. So, and what I think, and again, not to get all like, sci-fi or, go like too far down the road, but I mean, I believe that like every person and every business is essentially like a microeconomy, right? Like I think we're going to see at some point this whole concept of like person as a protocol, right? Like in the current TradFi system, like an individual can't fractionalize themselves, right? You can't really. I mean, look, there are some projects, but like there's no way to sell 5% of your future income, or like, if you're a freelancer, you can't tokenize your freelance hours, or if you're a musician, it's in the traditional finance environment, you can't, it's really hard to tokenize your work or tokenize your royalties or tokenize your popularity. And capital's locked in bank accounts and in illiquid real estate and contracts, right? But we're moving into a world where eventually anybody will be able to issue a token backed by their balance sheet or backed by their cash flow, and you'll have Alex is buying things with the Alex token, and Bob is buying things with the Bob token, and it'll be tied to your time and or access or intellectual property rights, or performance-based incentives or career revenue. Not to mention, receivables, which is like what we're working on. It's sort of a narrow niche to start to like execute on these concepts. But I mean, there's just so much road ahead, and so much that can be done through real world asset tokenization. So like we're really excited about all this stuff and working on it, and talking to guys like you, all of you in this that are building really cool and exciting projects in this space, because we're basically building the future.
Scott, you did a phenomenal job explaining that, and I want to add a layer on top of that. There's really 3 revolutions or transformations happening. So first you have the data that populates the balance sheet, so how you're getting all that information, those numbers, and that's being heavily impacted by artificial intelligence, the ability to collect millions of data points and doing that over and over again. This is what creates accurate valuations and risk assessments. Number 2, the second is how capital moves, and this is where blockchain and tokenization are really changing the game. And once we produce numbers on a balance sheet, then we can start to tokenize that and turn that into transactable value. In addition to secondary markets, I think collateralization is going to be huge. Not everything can or should be traded. Sometimes we just want to use an item as collateral and go that way. And it certainly has its benefits within the TradFi system, whether it's taxes or liens. And then the third is everyone coming onto the web. So just the World Wide Web in and of itself. So you can create the valuation, you can tokenize it, but then you have to distribute it. And as more people are getting online around the world and are becoming accustomed to this technology, there becomes this opportunity to distribute and transact all of these tokenized real world assets that have been created. So there's these 3 massive pillars, and we just happen to be, all of us, in the right place at the right time to capitalize on the opportunity, the data, the computation, and the storage of that, blockchain, Web3, and tokenization, and then the distribution and the borderless economy, the globalized economy that's emerging.
Nah, great points, guys. Definitely agree with what was just said for both of you guys. Scott, I do have to say, like, I think that this is what Web3 is all about. We can't be afraid to go all sci-fi on this space, because that's what's going to drive the innovation, right? I'm a huge believer that even time is something that can be tokenized, especially for freelancers, for businesses, things like that. because, I'm even thinking about while you guys were talking, I'm like thinking, all right, maybe I should tokenize my time and sell my time to my kids, my wife, so that they can cash those tokens in whenever they need time with dad or their husband type of thing. But yeah, so shout out to Tyler who's listening in. Hey man, let's get together and let's build that thing. So anyways, yeah, I love it. And so even like you said, businesses can be their own little economy. I think that even users can be their own little economy as well. So yeah, great call outs. Nick, you had your hand up, my friend. Go for it.
Yeah, we're discussing, right, a little bit more abstract, I would say, on where tokenization for these specific verticals are heading towards to. But it's almost like you have the blockchain trilemma, right? And it's almost kind of one abstraction layer down where you find new challenges with tokenization. So typically where it falls short is either the use case, the business, that has, I don't know, compliance or just a business process challenge. Then we have, let's say, technology challenges that most of the blockchains and solutions are kind of solving. But I think the most important one is liquidity. And because I've seen so many use cases where the technology was available, where the use case and the business case was available, but just the lack of liquidity or availability of liquidity is just killing the use case. So I think we need to find a way to solve this trilemma in tokenization before we can speak about all these exotic challenges that we see and make it more understandable for, I would say, the average Joe to participate. So yeah, it's very challenging, but yeah, also a big opportunity in this ecosystem.
1000% agree. The foundation needs to be put in place, definitely. Chainsight, I'm glad you raised your hand, man, because I was going to call on you because I am a huge fan of tokenizing personal data. So I'm kind of curious your thoughts on this. Go for it.
Thanks. Yeah, it's definitely, the topic of RWA or DeFi. Like for me, it's everything is considered as DeFi as a finance. It's everything's, you can collateral, you can liquidate, whatever you want to. We're just segregating the segments right now, as we call it RWA, we call it DeFi. But at the main point, as you mentioned, we are looking into how do you, decentralize the actual data itself, right? Like we're speaking about GAFA and all this, where you have all the data points, even, we're talking right now on the X. Where is this data actually going into and who is it used for? How is it monetized? We always think about that. And that's one of the reasons we started off Chainsight was how do you democratize the actual data point and give it back to, say, Scott right here, Nick right here, right? How do you monetize? And I think, Nick was mentioning about, or one of the guy was mentioning about, tokenizing your time to a family so they can give you money back so they can spend time. That's understandable because at the same time, if we're talking about tokenization, yes, it needs to be something really considered as whether it's can you liquidate. I see trapped capital not only in like financial assets but also in data. Going back and building verifiable on-chain data pipelines. We're unlocking a whole new class of economic activity. And this is something that we really need to look into because we do talk about, the buildings, we talk about the luxuries, we talk about the commodities. But again, where is this data actually coming from, right? How do you verify it? I was actually talking to one of the regulatory based in United Arab Emirates about 2 weeks ago, and one of the point they were mentioning about RWA was there was an incident about one of the apartment getting collateralized, tokenized, but it wasn't the owner's. It was someone else who just decided to tokenize it and issue some kind of documents, and it wasn't there. It wasn't the actual owners. So there's going to be a lot of, where I'm definitely looking forward on how these, RWA narratives or whether it's the data narrative goes ahead of the time. but of course they will be some kind of like regulatory bodies who's going to be governing this. But I'm pretty sure it's not going to be heavy as, you know, what we believe. But at the same time, as a project, as a founders, really need to think about that point, because when someone becomes rich, that means someone's becoming poor. So we, you know, looking into the bright side, like we're in a blockchain industries. We're definitely in an era where back in the 90s, it was IT. Now it's the blockchain. And I'm grateful on being, you know, able to live in this era. But at the same time, how do we protect someone else who is coming into this industry, who's not playing on the protocol level, who's not on, you know, founder level, but the actual users, how do you protect them, right?
Yeah, great points. It goes back to what Nick was saying, like being able to establish a great foundation for us to be able to build on to move into these different kind of these different innovations around tokenization. Jose, my friend, go for it.
Thank you. Just wanted to add to that point, because I think that actually real world assets is one of the first times that crypto has a non-zero sum game. You have a productive asset and you're enabling access to the revenues that are created from this to the public. So that's my thought in terms of what it can bring. I think that in terms of liquidity, not everything that you tokenize can be liquid. There are certain parameters. There's asset size. But where we see that capital is trapped, and the opportunity that we have spotted and are operating in is in emerging markets, is in high growth markets. And it's where we have seen that people don't have the fundamental access to the same opportunities that we have around the world and in America, Europe, UK, in more developed markets. And we can see faster adoption. We see that as a user funnel. When you're buying your first tokenized stock, for example, our most sold product on Facet is tokenized NVIDIA. There's a journey that the user follows in terms of buying your stock, then you buy your first crypto, then you go into altcoins, and eventually you go into DeFi. So I think that the onboarding of these masses is dependent on the quality of that whole journey, from your on-ramping, your conversion, and then your path through wallets and DeFi. So that's I think where there's a lot of capital that's trapped. It's not only on the supply side, but there's also demand without supply.
Yeah, exactly. Exactly. And you know, as we've kind of pointed out, tokenizing sounds really amazing, right? But as assets are tokenized, it doesn't always mean, you know, tons of liquidity for, you know, for a lot of things, right? When I jump into a lot of different, projects, especially potentially like real estate and things like that, yeah, it does provide a lot of liquidity. But I guess my question to you guys is, when I do if I'm a normal investor and I invest into these different kind of RWA projects, are we really locking up tokens in a specific single project or even a single chain? And does that really limit the opportunity for, you know, future growth, future capitalization? If so, you know, how can we actually make this so that it is more profitable, we can provide more liquidity as a result of these going into these assets? Because I think that from a user standpoint, that's one of the biggest fears that a lot of people have is that they're locking up their investment for long periods of time before they'll be able to get their assets back out. Curious what people's thoughts are on that. Scott, you got your hand up first. Let's go with you.
Yeah, great point, Cody. Tokenization is a powerful tool or technology or whatever, you know, however you want to refer to it. But yeah, I mean, it can become another silo. You know, if you tokenize an asset and then you trap that liquidity in a particular project or vault or even a chain, then you know, in a way, you're kind of just building a shinier walled garden, right? So, you don't want to limit interoperability or, flexibility for investors, or, the ability to kind of cross ecosystems. So like at Receivable, we're designing everything to be open and composable and chain agnostic. Like, our liquidity pool that we're building, it's using interoperable token standards, so they can be bridged or wrapped across chains. I mean, that's the idea. We're sort of working towards a modular layer where funders and platforms and investors can plug in, regardless of whether they use a particular chain, whether they're using Ethereum or Solana or any L2s, right? You can even eventually incorporate enterprise permission chains, right? So our pool, like which we're branding the Bullpen, kind of like this space. So investor liquidity would enter that pool, and then it'll dynamically allocate capital across tokenized receivables, from many different funders and asset classes. And I think you have to look at both secondary market mechanics and redemption mechanics to provide investors with the flexibility to access their liquidity, so that it's fluid and again not fragmented, across different different vaults or different chains or different projects. So that's kind of our thoughts on it. And I think as more projects come to market, more ecosystems integrate, whether it's through APIs or bridges or secondary marketplaces. I think at least for Receivable, what we're building, we'll sort of become like that connective tissue that lets tokenized assets move and grow and not be isolated.
No, great point. Great point. I mean, I look at it from, I used to do a lot of dabbling around with like peer-to-peer lending, that kind of thing. And it is kind of frustrating to lock up your liquidity that you provided for these short-term microloans. And so sometimes you got to wait a few months to a few years to get your money back. Where, in the RWA world, I like that I can kind of get fluid, I think is what you were referring to, that you can come and go. You're not kind of locked in like you are when you do these like Lending Club, Prosper. I don't even know them all, but I think you get where I'm going with that. Matt, you got your hand up. Go for it.
Yep. I'll compliment that interoperability is extremely important. I also think that we shouldn't sway away from the trifecta of the value of the underlying asset, the quality of the smart contract, and the distribution plan. A lot of the illiquidity that's being recognized in the industry, even when there's a promise of liquidity, is because one of these pillars is being ignored. Maybe the underlying asset is not reliable or does not have a good return. Just because you can tokenize it doesn't mean you should immediately. And so sometimes people will get into a deal and they realize that it's not as great as it actually is. Same thing with the smart contract. Maybe it's been built in a silo. It lacks interoperability. It has security issues. And then suddenly that becomes a weakness for the entire deal. You could also disseminate that to where that smart contract, which is really a piece of ownership, sits in the capital stack. So just owning something isn't enough. You have to know how you own it. What are your terms? What's the actual ownership and plan? Is it that you get bought back at some point, or you just hold indefinitely and it's supposed to appreciate? What's the strategy here? And then the distribution. How many people know about this? How many people are interested in it? If I'm supposed to be able to trade it, is there a marketplace that's proactively sourcing new buyers for me? If there's no buyer to me as a seller, then there's no liquidity. How do we generate that demand? How do we get more people? How do we get more eyeballs on the investment opportunity?
No, I like what you said there at the last. I mean, I think that's a That's a problem for a lot of like these NFT quote unquote art pieces, right? People buy them out of speculation. People buy them because they like it, but in reality, nobody wants to buy a pixelated art of a wiener dog uh, down the road. It might, right? So, I mean, that's where it all comes into play. Is it's especially around the art side of the NFTs and RWA kind of stuff. Is that it's all in the eyes of the beholder, right? The value is,
Bro,
but
you just assaulted my entire portfolio. It's all wiener dogs. Thank you.
yeah, no, yeah, it's all good. It's all love, Scott, for sure. But Matt, you got one thing you want to add real quick?
Yeah, I think that's a great point because if you look at all the hype that was generated around NFTs, it neglected basic supply and demand. There was so much supply. There was new NFTs being minted, thousands every single day of every new type of character that you could possibly imagine. You add that onto the 2 quadrillion that already exists. I mean, you're competing with money market funds, treasury bonds, real estate, art, houses. Like people have money dedicated to other places. And now you're introducing more things for people to invest into. Even CME, the futures market, struggles with illiquidity at some point where there's only a couple contracts trading, and that's one of the biggest markets in the world. There's only so much money and so many people to go around, and people are very overestimating how much demand there is for these different new, innovative, possibly risky financial products.
100% agree. That's why I like where a lot of you guys projects are headed, in terms of getting repayment back in short periods of time versus, being able to stick in my investment and get a nice passive return. Definitely. I mean, I think all of you guys are definitely working on some great things there. So, we're coming up at the top of the hour, so just want to be mindful of people's time. If you want, let's go around the horn and I'll give you guys a chance to kind of shill your projects because they are definitely a great kind of thing. It's headed in the perfect direction, I think, with the RWA side of things. So let's start with Matt. We'll start with you, my friend, and then we'll just kind of keep going around. Jose, I see you fell out of the speaker panel. If you want to request one more time, I'll get you up so that you can do the same.
Awesome. So I'm the founder and CEO of Building Inc., and we have a goal to bring transparency, efficiency, and liquidity to real estate. We bring AI-powered data collection, verification, and organization to the real estate industry so that we can turn all of that information into valuations and value that people want to transact as a digital asset. And we think that this is going to create more seamless transactions, new opportunities for investors, and more trust in these underlying assets. In sum, we're a data management and tokenization platform for real estate.
Love it. Jeff, my friend, go for it. Oh, it looks like we might have lost Jeff as well. Chainsight, go for it.
Sure. We're the open data network, and we're basically bringing this alpha probably next week, and we already have the beta version that's for limited partners right now. What it would do is you could basically spin out your Oracle, index it with 3 clicks. So whatever RWA data you need or whatever assets you need from volatility to commodities, you bring in API data, spin it off, 3 clicks, boom, it's yours. So that's something that we're going to be providing within upcoming weeks. So if any of the projects right there, if any of the builders right there is in need, please get in touch with us.
Definitely. Thanks for being here. I think we got Jeff back. Let's go with you next.
Yes, can you hear me?
Can hear you.
Awesome. Got rogue there. Yeah, so quick alpha from our end. Our public beta is about to go live. Anyone listening, we would love to have you involved. We kept it very basic, very simple for the MVP, but live on mainnet. We have a sort of airdrop campaign attached to that. So we'd love early adopters to get involved, deposit some assets, give some feedback, and as we push towards TGE, all hoping everything goes well with the market. But, that's it. If you want to know more, just, check out our Twitter, log on to our Discord, lots of information there, but would love to see you there.
Love it. Love it. Thanks for being here as well. Joel, go for it.
Hey, so first of all, if you are an Android user, download the Dash Pay wallet. It's pretty cool. The iOS version will be coming soon enough, but right now it's just Android. You can register a real cool username, friend people, make payments, write your encrypted metadata to the blockchain, which is really cool. There's privacy features. There's a map of where you can spend it. You can buy in the app. Pretty soon, you'll be able to spend it easily all over the US and then other countries too. And hopefully in the next couple months or so, there will be bill pay options for about 3 billion people around the world. So if you want to experience the digital cash life, that's the way to go. And also, if you're traveling to any conferences, I'm going to speak at ETHDAM in May in Amsterdam, among other conferences, but I'm going to particularly show that one because I think it's the best crypto conference, the most alpha, etc. So definitely hope to see you guys there.
Awesome. And let's shoot it over to Nick.
Yes, sir. Joel, at least it's one of the best cities. I'm coming from Amsterdam, so it's a home game for me. So give for all the listeners, follow everybody. I think use your social capital. I think everybody's building something amazing. So give them a follow, a like, tweet them, whatever you need to do. From Amplifi perspective, we are relaunching the platform within a couple of weeks after next asset listings, and it's going to be interesting to see what happens. We're going to have a more institutional approach combined with the retail approach that we already had in the past, stable APYs with potential upsides. So check out the platform, sign up for the waiting lists from, I think, next week onwards, and follow us.
Love it. Scott, bring us home.
Hey, man, thank you again for doing a bang-up job hosting the Bullpen today. Thanks to all of the speakers and listeners for attending. Really enjoy. This is the highlight of my Wednesday. Just to show receivable real quickly before we sign off. Receivable is reimagining how capital flows in the real world. We're starting with revenue-based financing. It's a $100 billion industry in the United States. And then we'll go from there. We're turning high friction, illiquid deals into tokenized tradable assets backed by real cash flow from real businesses. If you're a revenue-based funder looking to free up capital or an investor chasing yield with transparency, we're your bridge between TradFi and DeFi. The future of finance isn't centralized. It's composable, programmable, and is built on chain. So we're excited to keep working on this and keep everybody updated on our progress.
Love it. Scott, I'm glad this show is, the Bullpen is definitely getting you through that Wednesday hump of the week. So hopefully it does the same for everybody else. But, thanks for everybody that has participated on the panel today. We appreciate you guys taking time out of your busy schedule. To our listeners, yes, definitely give them a follow. They deserve it. They've got some pretty awesome, projects that they're building. Can't wait to see it. Likewise, thanks to all of you for tuning in live as well as listening to this recording. We appreciate you guys. We couldn't do this without you. So, and we'll be doing this every Wednesday at 10 a.m. Eastern Standard Time. So make sure that you mark it on your calendars. We've got some great topics coming up. And until then, let's grab the bull by the horns and make it a great week. Thanks, guys. We'll talk to you later.